Good evening and welcome to another edition of a weekend business program, Capital Market Live on Channels Television. I'm Ladi Williams. It's great to have you join us. Now let's take a look at how your money performed during the week. Now, starting with global equities markets. Now, we see major equity markets around the world ended the third trading week of November slightly mixed as investors continue to assess the trajectory of monetary policy after some tough statements from U.S. Federal Reserve officials. In the United States, the Dow Jones Industrial Average rose 199 points to 33,745 points, while the S&P 500 climbed 0.48%. The Nasdaq Composite finished just 0.01 above the flat line at 11,146 points. That's at the closing we had for Friday. In Europe, the UK's FTSE 100 gained 0.53%, while Germany's DAX index jumped by 1.16%, while France's CAC index gained 1.04%. Across Asia Pacific, markets in the region ended with mixed sentiments. Japan's core consumer price index for October rose 3.6% compared to a year ago, higher than expected and at the fastest pace in 40 years. The Nikkei 225 dropped by 0.11%. Hong Kong's Hang Seng Index slipped 0.29%, while China's Shanghai Composite Index was down by 0.58%. All right, now let's, for analysis for the U.S. markets, we have Olumide Adesina, financial market analyst, joining us via Zoom. Great to have you, Olumide.
Yeah, thanks, Ladi. Thanks for having me.
Yeah, great to have you. So it looks like investors were not pleased with the Fed Reserve speakers. All the averages posted losses, for the week.
Yeah, pretty much it was kind of surprising, knowing fully well that the week before it was more of a pivot direction where we saw most U.S. stocks rallying high. And that was the fact that the CPI came much more lower, moderated beyond economics, many economists anticipated. And we saw the boost coming. But this week, it's been a different scenario. You need to fully understand that despite we saw U.S. yields inverting, the fact that inflationary rate still remains higher than the U.S. Fed target at 2% was kind of surprising that the U.S. Fed speakers still remain adamant that they would still play to the book of increasing interest rates. And, that really triggered mortgage rates in the United States high. And equity firms that had exposure in those entities, you could see that they posted losses. Also, surprisingly, crude oil in the United States seems to data seems to suggest that there is an oversupply for the first time in almost a year. So we saw the fact that all exposed sectors, pretty much didn't do well. And, growth sensitive assets, particularly in the tech stocks, you could recall that Coinbase, for example, has a strong exposure in the crypto markets. In fact, it's the biggest listed entity in the crypto markets. Saw downward review in prices despite Invest owned by Catherwood buying into that stock. And that just tells you the pessimism around growth assets. Also, Amazon failed to break above the $100 mark, despite the fact that it has lost over $1 trillion in market value. And pretty much the investors are assessing the fact that can they really make much more buck in cloud computing space. Apple posted on a weekly basis decent gains despite concerns in China. And also, if you look at Tesla did woefully poor this week. And that was because investors are worried that Elon Musk, the world's richest man, is paying less attention to the world's most valuable car maker. So, Ladi, apart from the fact that we're seeing concerns about the U.S. Fed hawkish narrative, we see that key fundamental problems still remain. And, the war in Ukraine, Russia also has really affected supply distortion across many assets. And, that also weighed negatively in the outlook for the market in this quarter. But interestingly, one of the greatest investors in the world, Warren Buffett, showed exposure in the Taiwanese semiconductor company, and that just tells you that the world is betting that there's going to be high demand for microchips. Microchips plays a very important role in technology and automobile space. So interesting signs, despite the fact that we saw moderation in share prices relatively.
Right. I know Warren Buffett has been, buying most of those stocks right now. And but the CPI and PPI report for October in the U.S. were cooler, than expected. Do you think inflation has peaked in the U.S.?
Yeah, it's very difficult. Ladi, I'm not an economist, but one of the things I can tell you is that it really gives the Fed room to address any narrative towards increasing interest rates, because you need to understand that this is the first time in a couple of months that we've seen moderation in the CPI index. But the fact that oil prices are moderating below the $85 a barrel price tells you that it's possible that it might have peaked because energy prices weigh heavily in emerging markets CPI. So I think for me it looks like it has, but with the geopolitical uncertainty and the fact that we are officially looking like entering a global recession. You called that some days ago, the Chancellor of England announced that they are already in a recession. So that has already weighed on oil prices. And I think that would really help the Americans, because cheaper energy costs will definitely bring down the CPI. So yeah, it looks so, but it's very difficult right now to preempt with what is happening around the world.
All right, Olumide, let's leave the global scene now. Let's bring it down home here to the NGX. We see, there was a positive close, this week, even though when the week started, it was looking like it was going to be kind of bearish, but we did have, a positive close. Did you expect this?
Well, I wasn't kind of surprised, because you need to look at the prices of many of these valuable stock assets, and one was wondering when investors will start picking up these bargains. If you look at tier one banks, for example, you could see that GT particularly came from its yearly lows and it's now approaching the 20 naira mark. Also, if you look at the consumer sector, despite the fact that we're concerned about high inflation and problems that might bring into consumers spending in non-core assets, we could see Nigerian brewery stocks posting a maximum gain of 10%. Also, with the redesign of the naira, you have to give credence to the CBN's approach and the fact that this might really increase electronic transactions, and that would be favorable to the banks, because that would mean more charges and more ammunitions in their ecosystem. So I think the fact that some of them are already having profitable fintech companies like GT Squad, Alert Wema Bank, and First Money of First Bank tells you that they are well positioned to capture the market. And also, you also need to look at the problems in the private equity space, with many of the fintech companies laying off staffs and closing shops. That might be some form of good news, because it means less competition for our banks. And for the tier two banks, I think Fidelity and Wema caught me by surprise this year. They've posted stellar returns to their investors, and pretty much because they have solid management, they've been able to make much more needed reforms in their core services. And I won't be surprised if they maintain that momentum. For consumer staples, I think Dangote cement seems to be a bit worrying, and that's because of their external exposure to markets like Ghana and the Francophone countries, despite the fact that we saw an uptick in their sales beyond 20 million metric tons. You could see that the depreciation of those currencies affected their earnings. So it means that investors are kind of cautious in increasing their hold on that stock, and that's why you see the stock around 238 naira. But I think by next year, when we see more foreign portfolio investors coming into the market, because I feel that the problem we see in our FX market is relatively responsible to the foreign participation in our markets, and that would bring in some upsides. And blue chip names like these assets will definitely rise. But on a larger scale, I think you will not want to ignore Zenith Bank. This is Nigeria's most profitable bank, despite the fact that it has a market cap of 670 billion naira. If you look at the fundamentals, its earning per share is quite solid. I think it's even the highest in the banking sector. So investors definitely are really picking up that stock too. So it's been a kind of very interesting scenario in the stock market, largely.
And talking about
stocks included, we see Transcorp also gaining some form of investors' attraction. In fact, it was one of the most traded stock on Friday. So I think it's interesting time in the Nigerian stock market.
Quite an interesting time. And, talking about the financial services sector, we saw the stocks there. They were on fire this week. Is it a sign of things to come?
Yeah, I think, from different perspectives, you say that in fact, if you look at core fundamentals across that space, this sector has one of the strongest corporate governance in Nigeria, and that's kudos to the earlier reforms by the CBN. Also, with the market anticipating that they have fintech exposure, one would not want to bet against those stocks. And the price they are trading, like I mentioned, their earning per share, their price to book value, and also the fact that they have a very solid profit margin tells you that you won't want to ignore these assets. Interestingly, also, we've seen institutional investors, particularly pension funds and selected funds, going into this kind of stocks because of their the cash flow they bring into their portfolio. If you look at dividend yields, GTC, for example, it's beyond 16%. So you won't want to ignore these things. But the tricky part is that, we are entering an election year, and it's very difficult for you to predict how investors and sentiments will play in. And also, the truth of the matter is that despite we see price distortion in the parallel market, one would look at the possibility that will definitely not last, because price indications suggest that the naira is really at an overbought value, while in the Nigerian in the official rate, it's really very undervalued. So a devaluation of that currency will definitely kick up upticks in our capital market. And before I drop the mic, I also want us to look at the fact that these stocks also have been resilient in terms of bringing out resilient results. If you look at their earnings this year, pretty much decent earnings from across many sectors, despite our concerns, macro concerns, and inflationary pressure in Africa's largest economy.
All right, Olumide. Well, I guess we'll be looking out for how next week plays out in the equities market. Thank you so much, Olumide Adesina, financial market analyst, bringing us up to speed on what's happening in global space and also back here at home. Thank you so much. All right, now we'll take a break. When we come back, we head on to the fixed income market. That's in a moment. Just stay with us. Welcome back. You're watching Capital Market Live on Channels Television. Now to our next conversation. I'll be looking at the fixed income market. And we have Judith Osemeke, a fixed income analyst at Kairos Capital, join us via Zoom. Great to have you on the program.
Thank you for having me. Good evening.
Good evening. Can you run us through the NTB market performance for the week?
Yes. Okay, so last week, Nigerian Treasury bills performance actually turned bearish. This was largely due to low liquidity levels, which has been a theme in the markets in recent weeks. There were a lot of sell-offs that were recorded in the week. We saw, more offers from banks. We saw more offers from brokers as well. While there was minimal demand recorded on, select on maturities across the curve, we saw more significant sell-offs as investors exited positions on select short and long-term bills, such as the 23rd February and 14th February bills that advanced 116 basis points and 113 basis points compared to the previous week. So on the back of this, we saw secondary markets NT bills close the week at 10.6%, which is an increase of about 18 basis points from its previous week's close of 10.4%.
All right, but what is your expectation for the NTB market, next week, given, the liquidity levels and investor sentiment? I don't know if you can hear me, Judith. All right, looks like Judith is frozen there, but she was giving us details for the NTB market, telling us how it's going there. We're going to try and get Judith back. I don't know if we have Judith now. Judith, can you hear me? Okay, it looks like Judith is still frozen there, but we're going to try and get Judith back so she can bring us up to speed on what's happening in that fixed income space, because we know obviously investors not getting what they want, with risk assets would definitely want to look into, fixed income and try to get some safety in that market. But before we get Judith back to finish her thought, let's look at some stories now. Top stories for the week. We see Nigeria's inflation rate there accelerated to a new 17-year high of 21.09% in October 2022, up from 20.77% recorded in September. And that's according to latest data from the National Bureau of Statistics. The NBS report shows food inflation rose to 23.72%. from 23.34% in the previous month, while core inflation rose to 17.76% from 7.6%. The NBS attributes the surge in food inflation to increases in prices of bread and cereals, food products, potatoes, yams, and other tubers, oil and fat. And meanwhile, the highest increases in the core basket were recorded in prices of gas and fuel. And to other stories now, Nigeria's Debt Management Office says there's an urgent need for the federal government to moderate rising trend of borrowings to ensure debt sustainability. The Director General of the DMO, Patience Oniha, made this known at a workshop organized for members of the Senate Committee on Local and Foreign Debts and the House Representatives Committee on AIDS, Loans and Debt Management in Abuja. She mentioned that the current outlook shows that local and international markets are becoming tighter and interest rates are rising. The head of DMO asked the federal government to take steps to rationalize expenditure, accelerate growth in revenues, and ensure that borrowings were tied to projects that generated commensurate revenue to service the loans. And the Securities and Exchange Commission has urged Lagos Futures and Commodities Exchange, LCFE, and other commodities exchanges in the country to have investor protection at the center of their operations in a bid to improve investor confidence and attract more investors. The Director General of the SEC, Mr. Lamido Yuguda, gave the directive during the presentation of Echo Gold coins to the management of the Commission by the LCFE in Abuja. The SEC boss urged the LCFE and the entire commodities market value chain to always have investor protection at the core of their work to enable the product succeed. And the International Organization of Securities Commissions has asked issuers, external auditors, as well as audit committees to be particularly vigilant when considering how risks and uncertainties could affect or have affected an issuer's operations and financial condition. In a statement released, the board of IOSCO mentioned that factors affecting current economic conditions include, but are not limited to, inflationary pressures, volatility in currency exchange rates, rising interest rates, changes in monetary and fiscal policies, and other responses from central banks and other government authorities, among others. IOSCO also highlighted its commitment to the consistent application and enforcement of high-quality reporting standards and disclosure regulations, which are of critical importance to the proper functioning of the capital markets in line with its principles of securities regulation. All right, I think we have Judith back. Judith, I guess we lost you back there. Obviously, some maybe internet issues, but it's great to have you back, Judith.
Thank you. Apologies for that.
So
yeah, thanks.
Yeah, we're talking about expectations for the NTB market for next week, given the constraints in the market right now. You were about to finish your thought before you were cut off then.
Yes, I was saying that next week what we're really expecting is that the markets will remain quiet, most likely. Especially at the beginning of the week, liquidity levels in the system are expected to still hover around the same levels, with very modest inflows from coupon payments worth about 17 billion, OMO maturities worth about 40 billion, and NTB's maturity worth 213.4 billion, which would be rolled over. We know that at the start of the week, we're expecting the MPC meeting to hold on Monday and Tuesday, and there's a PMA that's going to be slated for Wednesday. So at the first start of the week, market players will likely be on the sidelines looking towards the outcome of those events, and then we'll likely see more activities towards the end of the week. However, it's still likely to remain bearish overall.
All right. Well, we're the 11th month of the year. Would you say the fixed income market has, met your expectation, so far as a trader? If not, what strategies can be deployed, particularly in a high inflation environment like we're experiencing right now?
Okay, so in terms of yields, right, we're still expecting yields to move higher, given the fact that there's still the federal government borrowing plans that are still expected to be met. For investors, we would likely say that for investors looking to take part in the fixed income market, short to medium term bills or instruments would likely be more attractive, because if you look at it in the long term, if you look at it, investing in long-term instruments right now may likely not be the smartest option, just because of the fact that yields are still expected to move higher. So it's like, as a private investor or as an individual, you would have to compare the facts, or you would have to consider the fact that you'll be locking up your funds for a longer time, when yields are still likely to still move higher going forward. Yeah.
All right. I guess investors have a lot to consider now before making an investment, because it's obviously tough times globally, with rising rates and risk off, at this point. Well, thank you so much. We've been talking to Judith Osemeke, fixed income analyst at Kairos Capital. Thank you so much for giving us your perspective.
Thank you for having me.
Thank you. All right, now, so let's get an outlook for next week. The CBN is set to roll over 193.03 billion naira worth of maturities at the primary market auction coming up soon, and the T-bills secondary market activity is expected to be quiet as participants will shift focus to next week's NTB PMA. Yields expected to trend northwards due to anticipated squeeze in the system. For the bonds market, sentiment expected to remain bearish ahead of the high inflation rate projection for October, and the equities market performance is expected to remain mixed as traders anticipate, and investors may rotate their portfolios towards stocks with attractive dividend yields and intermittent profit-taking activities. And that's it on Capital Market today. Thank you so much for watching. I'm Ladi Williams. Bye for now.